Hello, everyone. My name is Kenton Kavescu. I'm an ex-BCG consultant, an ex-Googler, and the founder of Rocketblocks, an online platform that helps candidates prepare for interviews. In today's Rocketblocks mock interview, we've got a very cool case about dealing with disruption in the automotive vertical. We've got two of our Rocketblocks experts playing the interviewer and the candidate. The interviewer is going to be played by Christopher. He's an ex-BCG project leader and a graduate of the London Business School. And the candidate is played by Eishan. He is also a graduate of London Business School and currently a second-year consultant at Bain. So let's go ahead and jump in.
Okay. Hi, everyone. This is a video run through for the self-driving disruption case. This is a great market analysis case that covers the full gamut of qualitative reasoning, chart reading, and brainstorming activities. My name is Christopher MacRae Ham, and I'm going to be leading the interview. Also with me is Eishan Dhandhania, who will be playing the interview candidate. So before we dive into the case, let's do some quick intros. As I mentioned, my name is Chris, and I'm a manager working in renewable energy in New York. I do offshore wind with a company called Energy Re. Before that, I worked in management consulting. I was with BCG in the New York office for 3 years, with the last year of that time as project leader in BCG's climate and sustainability practice. Before that, I was at Accenture Strategy in London, working in energy as well. And so overall, I've spent about 4 years in management consulting after doing my MBA at London Business School. And before that, I was an engineer in the oil and gas industry. Eishan, do you want to introduce yourself?
Yeah, lovely to meet you, Chris. I'm Eishan. I'm a current consultant at Bain Company in the London office. Been with them for the last almost 2 years now, and I did my MBA at London Business School before that. And my past life before that was in tech and finance. So yeah, excited to do the case.
Awesome, great to meet you. So before diving into the case, I'm going to slightly simulate the case transition that you might see in an interview and ask one quick fit question. Okay, good to go, Eishan?
Yeah, good to go.
Okay, awesome. So it's great to meet you. I have your CV in front of me, and it looks like you have some great prior experience. I just wanted to ask, what's making you want to move into management consulting right now?
Yeah, I think like broadly for me, moving into consulting is driven by 3 factors. The first one being like it's probably one of the only places where I can actually go or get experience and exposure to multiple industries, in a short period of time, and that is something that kind of like really excites me and motivates me as I've spent time focused in 1 or 2 industries in the past. The second reason is I love working in teams and with like very motivated people. That's one of the things about my last job that really motivated me. And whatever I've heard about consulting from my peers, it is like really great team environment where you're solving amazing problems with, very motivated and smart peers as well, who kind of like help you be the best version of yourself every day. And finally, I think to build certain skill sets, for me, I think like in consulting, you learn the art of storytelling and the art of breaking down problems and like really coming to crisp solutions in an 80-20 way, which is quite unique to consulting and not very common across the board. So like that's something I really want to sharpen my skills on as well.
All right, yeah, that makes sense. And yeah, I had a lot of similar reasons for getting into consulting myself. I can relate. All right, so with that, ready to dive into the case?
Absolutely. Looking forward.
Awesome. Okay, so here's the case question. So your client is a large Detroit-based auto parts manufacturer. They have annual sales north of $5 billion, and they manufacture a wide portfolio of engineered products for passenger vehicles. So, critical components here like the powertrain, so differential gears, transmission valve bodies, also the drive line, so things like the axle system of the car. So pretty critical pieces of a vehicle. So the company sells these products to a number of OEMs that assemble these pieces into a completed vehicle and bring it to market. So think of people like General Motors or Ford as being their client base. So like much of the industry, they've lost 50% of their stock price in the last few weeks. This is following a bunch of analyst coverage touting the risks of self-driving cars and the impact of self-driving cars on the long-term prospects for the industry. one analyst has actually updated his model with a terminal value of $0 for your client. So it's not a good development for the client or for the industry at all. So the first question with this is, the CFO of this auto parts manufacturer has asked for our help to separate the hysteria from the reality in understanding the nature and magnitude of the risks to his company. So you're on the ground in Detroit. You have a team of 4 consultants for the next 5 weeks. What approach are you going to take to evaluate the question?
Yeah, thank you so much for your question, Chris. That was a lot. So just let me just make sure I got everything correctly.
Sure.
I used to be an equity analyst and probably tout some of this hysteria in my past lives to other companies. So now I know how they feel on the other side.
Right.
So just to be sure, so our client's a large Detroit-based auto parts manufacturer, and they have sales north of 5 billion. They manufacture critical components of the cars, such as the powertrain, driveline, etc. Their clients are like OEMs similar to Ford. Recently, they've lost 50% of their stock price because one of the analysts said that the risk of self-driving cars is too difficult to this industry. And one analyst is essentially given our client a terminal value of 0. The CFO essentially wants us to figure out what is reality and what is noise. And he's kind of asking us, how would I approach the problem? Does that encapsulate everything you've said?
That's exactly right. Yep.
Also, I have 1 or 2 clarifying questions, if that's okay. So do we have an understanding of like anything to do with how many parts that can cross over between self-driving cars and non-self-driving cars?
Yeah, I mean that's a good question. I think there's a good amount of overlap. At the end of the day, I would think of a self-driving car as being kind of like a standard car, but with some extra sensors and IoT and that kind of stuff.
Okay, I think that's very helpful. And when we say like our client has buyers like General Motors and Ford OEMs, do we know if like our clients' clients are like the top companies in the auto space, or are they like just side companies? Like what kind of the profile of their buyers?
Got it. Yeah, we'll do a more detailed analysis there later, but for the time being, yeah, we can assume that our clients are pretty big names in the industry.
Great. That's good to know. Awesome. So if it's okay with you, I'll take about a minute or so just to structure my thoughts, and then I can come back to you on how I want to approach the problem.
Yep, that's great.
Amazing. Thank you. Awesome. So I have a plan on how to attack this. I'm going to look at it from three angles. One is the overall market. The other is the company. And finally, look at some risks. From a market perspective, I just want to understand what the state of the auto market is, whether it's growing, shrinking, etc. Broadly understand what the size of the market looks like, and then think about the competition and what are some of our competitors doing.
Okay.
And then from an internal company point of view, I'd want to focus on, what kind of products that we have. And, you already mentioned that there is overlap between self-driving, non-self-driving. I just want to dig into that a bit deeper. Look at our buyers. Again, a question that I already asked you, and you've given me a brief response. I'd would love to dive into that a bit more. Finally, I think just positioning and how our client positions themselves, whether it is, a tech-forward company or it is a little more old school. So I think just getting that out of the way will also be good. And then finally, just looking at the risk in the industry in the event that, the market doesn't grow or is starting to shrink, what else could our client be doing, etc. So just kind of thinking about that as well. Does that resonate with you?
Yeah, great. I like it. That is a solid MECE framework, and I think those elements will help us answer the question. So which area do you want to dive into first?
Yeah, I think I'd love to understand the auto market overall.
Okay.
What whether it's growing, whether it's shrinking, what's the size, etc. I think that will give us a good understanding of where to go next.
Okay. So actually, a fellow associate on your team has begun pulling some historical data on those key metrics. So
Brilliant.
I'm gonna flash up my screen here and show you some numbers. Just to give you a quick heads up, on the left-hand side, they're showing something called seasonally adjusted annual rate, the SAAR. So that's a metric of new automobile sales. And it's been adjusted to reduce any kind of intra-year seasonal variation in noise. On the
Okay.
right-hand side, auto park, that's the number of vehicles in operation on the road. So basically my question is, what do you take away from this data here?
Yeah, awesome. I think the first thing that like jumps out at me is the dip in 2009, which probably signals the financial crisis, and reduction in consumer spending, which is a lagging indicator of the number of cars on the road as well. I think that's one of the biggest things that jumps out. But the other thing I would probably say here is that it seems that the auto industry is a bit cyclical, as you see like a peak and a trough, and it goes going back up. So that could be, and then you see on the car sales, it's starting to come back down. That could be indicating a bit of a downtrend. Um, but I think broadly what I do see is that it seems like a fundamentally strong sector which might go through some cyclicality, but people will still need cars on the road.
Got it. Okay, so basically you're feeling like the industry is in a pretty strong position right now.
That's what I would say that there's
Okay.
a potential decline coming up based on the data on the left, but it seems like a fundamentally strong industry. Yes, that's correct.
Okay, great. So with that in mind, a key piece of your work stream is to build the model that simulates the impact of self-driving cars on the market size. So
Okay.
your manager comments that, since you can't look at historical trends for insights here,
Right.
you'll need to build your market on an assumption-driven basis.
Okay.
So I was hoping to do a quick brainstorm here on what are some of the ways that the proliferation or introduction of self-driving cars might affect the market for passenger cars in the US.
Um, awesome. Thanks for that question. Let me if is it okay if I take a couple of seconds to think about that?
Yep, for sure. Yep.
Awesome. Thank you. Yeah, awesome. So I think the way I think about this is from, the overall market perspective, and like kind of thinking, if I break that down, it is essentially driven by like the price and the volume. So if I look at those two levers, from a volume perspective, I would say that the number of cars in circulation would potentially be going down, as you probably just have more use of ride sharing, etc. So car ownership would potentially reduce. And if there's self-driving cars, even within the ownership bucket, there would just be more utilized cars, because like, if my dad takes the car to work, it won't be standing around there anymore. You can like do a lot more trips in between. So I think broadly the volume will go down. From a price point of view, I expect, because these are more tech-driven, newer cars, the price of cars on average would go up. Um, so I think that maybe as the adoption curve and the learning curve on production of these cars with time might lead to a reduction in price in the future, but in the short term, I do see an increase in price. And I think that kind of makes me believe that like the OEM manufacturers, the ones that actually get on this self-driving train as soon as possible, could be the winners coming out of this new trend.
Got it. Yeah, that makes sense. I think that the price point makes sense and the volume reduction point makes sense. Can you think of anything else on the volume side of things? Any other impacts that might affect it?
I think, let me just take a second to think about that. Yeah, I think like for me, it does boil down to the utilization and like
Mhm.
sharing of cars. So uh,
Okay. What about the lifespan of cars or maintenance needs?
that's a good point here. I'd say that, because you're driving more miles, you would have maybe shorter lifespan of cars. So you'd see more cars coming through as a result of that, but with larger maintenance needs as well. But like hopefully the OEMs can produce cars that can last longer while they start driving. Because I also expect
Mhm.
that a computer can drive a car more efficiently, which would mean that
Sure.
the life of the car could balance
Mhm.
out with the extra utilization.
Yeah, that makes sense. That's great. Okay, great.
Um,
Um, yeah,
Following that, would you also like me to size the market?
yeah, that would be great. Let's move on to a market sizing here. So your CFO believes the biggest risk in the light vehicle market is the possibility of a reduction in the number of vehicles per household, right? So the
Right.
notion is that a household of four, for example, might have previously owned two cars for
Yeah.
two of the parents to commute to work, and maybe they have a third car that's shared by teenage kids.
Right.
But with self-driving cars able to travel between different family members throughout the day, and
Yeah.
not just sitting idle wherever they were last parked, the
Right.
family might now only need two cars, or need fewer, right? Because they'll just be reducing this idle time.
Yeah.
So I guess with that in mind, what would you say is the potential impact to the size of the total car park from this effect?
Yeah. If you can give me a second, let me just think about how I want to go about this approaching this problem, and then we can maybe
Yeah,
discuss it.
yeah, it's a big question, so definitely take your time to find an approach.
Okay. Awesome. Thank you. Amazing. So I think what I'd like to do here is I want to start off with laying out at a high level how I want to approach this problem, and then maybe dive into a couple of assumptions that I think might be sensible to make in this case, and then do the math after that. Does that sound okay?
Yep, that works for me.
Perfect. So I think the way I'd like to start is obviously starting with the number of vehicles on the road based on the spark chart that you have. Um, I think I'd want to split that into probably personal ownership and commercial, um, and approach them slightly differently. My thesis is that personal ownership will go down, commercial will go up. Um, the and then I think with diving deeper, much deeper into the personal ownership, I think we can split that probably by number of households and the size of household. And once we kind of go into that, I would say you can have the number of cars per household of each type, and then what the reduction of that would be. So that would essentially give
Hmm.
you the total reduction. And then with the commercial side of things, which I think is a much smaller number, I guess we can maybe just apply a factor or percentage to increase that for something that makes
Hmm.
sense. And then we can, adjust both, and we'll have a number of whether it totally goes up or down.
Yep,
So,
I think that's great. That makes sense as an approach to me. Yeah.
amazing. So I think since I have this approach locked in now, I think what might be helpful is if I can run some of the assumptions by you, and then I can go and do the calculation after that. So would it be okay if I use 250 million vehicles based on this chart? It's
Yeah,
slightly less, I know, but if that's okay.
yeah,
Um,
yeah. I mean, I think if we were to, this is a past data point. If we assume that it keeps growing, I think 250 million is a reasonable number. Yeah.
Brilliant. And then I think for passenger to commercial split, I am assuming 90-10. Does that, seem ballpark correct, or is
Yeah,
there something else
that's
you prefer?
reasonable. It's reasonable. I think to make this easy, 90-10 works. Yeah.
Amazing. And is 120 the right number of households in the US? 120
I
million, I
mean,
mean?
yeah, I mean, give or take, yeah. I think if we were to take 120 million and do just an even split between the segments that you talked about, like an equal division, that
Amazing.
works. Yep.
Perfect. And that is super helpful. And like just to be clear with the segments, I'm thinking about 1 person, 2 person, 3 person, and 4+ person household. So since you're nodding, I take that you're aligned with that.
Aligns. Yeah.
And then with the number of cars per household, I'd say that one-person household has one car, two-person about 1.5, three-person household 2 cars, and 4+ person household 3 cars.
Yeah, I mean, broadly speaking, I think those numbers work. Let's run with those numbers.
Okay, awesome. Thank you. And I'm making assumptions between like maybe 10 and 15% or 20% of reduction, where I think it makes sense to, like, I'd say for 1% it goes from 1 to 0.9. For 2% it goes from 1.5 to 1.2. For 3% and 4% is where I think the biggest impact is, where it goes from maybe 2 to about 1.5 and 3 to 2 cars. Do you kind of agree with that as a
Yep.
ballpark?
Yeah, those numbers work. What we're talking about here, the like about 20% reduction works, and the numbers we've picked, will help make the quant a little easier here. So that works fine for me.
Fantastic, thank you. So now we have all the assumptions laid out. Let me now do the calculation to see the reduction. So what I'm going to do here is I can calculate the number of cars per household for each of the segments, and then I can calculate the reduced number of cars per household for each segment, and then that'll give the difference will give me the reduction in cars. So I'll just take a minute here to do the math and come back to you. So in terms of the reduction, for a 1-person household, I'm getting about 3 million. For 2-person household, I'm getting 9 million. For 3-person, I'm getting 15 million. And for 4+ person, I'm getting 30 million, which gives me a total reduction in personal cars of about 57 million.
Got it. So when you sum up the reductions from each of those segments you laid out, you're saying 57 million less cars on the road because of autonomous vehicles.
That is correct.
Okay.
And now I can shift to the other side of my tree, which is the commercial vehicles, which, 10% of 250 is 25 million.
Yep. Okay.
And is it safe to make an assumption to say that, this will increase by about 20%?
Yeah, I think a 20% increase is reasonable, considering the decrease in the personal side.
Perfect. So that gives me about 5 million. And if I adjust the two, it's about a decrease of 52 million, which over a base of 250 million cars is about 20%. Now, this is obviously not a small number of reduction. So, our client will have to be prepared to make sure that they are positioned to do well in a world where it is reducing. However, it is also not as doomsday as some of the analysts have previously said. So I think as a next step, it might be prudent for us to think about how can our client best position themselves in this market. You're on mute, maybe, Chris?
Yep, sorry, it was on mute.
Yeah. The joys
All
of
right.
online interviewing.
Yeah, exactly. Now that totally makes sense. And I think as a next step from the quant, that's exactly where we want to go. So, looking at the impact of the market overall, your manager wants you to switch gears and discuss the client's specific risk exposure. So basically the brainstorming question I have for you is, what factors might either further expose or partially insulate the client to this market trend?
Yes, that's an interesting question. If it's okay, I'll just take a couple of seconds and then get back to you on this.
Yep, for sure.
Amazing. So I'd say there's 3 angles from which I want to look at this. The first one is product. So I think products are going to be quite important because our client's product portfolio is going to determine whether they can succeed in a self-driving and non-self-driving market or not. So I think having the right products is very important. The second one is partners or like buyers. So having the right buyers on your books who are positioned to succeed in this market will also allow our client to succeed. And finally, talking about capabilities, I think the client should start investing, or like if they already haven't, should be thinking about investing in R&D for high tech parts, etc., that are relevant for self-driving vehicles, so they can actually be best placed to take advantage of the increase that's going to happen in self-driving.
Great. Okay. Thank you. That's really, really helpful. I just wanted to jump to one last analysis then that builds on the brainstorming we just talked about here. So I'm going to bring up another chart.
Perfect.
Okay, so the other associate on your team has put together an analysis spreading revenues apart by product category and by OEM. So you can see the OEMs, the manufacturers, are flagged with an asterisk if they've announced a comprehensive partnership with a Silicon Valley tech company. So we're thinking like an Uber or an Apple.
Okay.
So some of these partnerships are focused more narrowly on the development of self-driving vehicles for resale, while others have a broader scope and could eventually encompass a driverless car hailing service as well. So I wanted you to have a look at this chart here and just tell me what conclusions do you draw about the client's risk?
Yes, I just to be sure of what this says. So this chart is essentially split by the product and the revenue per product, and then the second layer split is by our client's client, right?
Yep, that's right. Yep, percentage of revenue by product. That's the colors, and then the x-axis is our
Perfect.
clients. Yeah.
Yeah, so I think from a risk point of view, there's one thing that jumps out at me, which is the lack of exposure to computerized components from our client's perspective, which is maybe making up less than 10% of their revenues, which is obviously going to be critical in the self-driving world. So like maybe that is something our client can step up. However, there's also like a couple of really big positives that I see on this chart. One is the fact that about 60% of their clients are actually part of the self-driving game, which means that our clients are tied up with the fast movers in the industry, which will allow our client to succeed as well. And the second thing that I find quite interesting here is that about maybe 70% of their revenue comes from 70 to 80% of the revenue comes from generic car parts, which are going to be relevant across the board, no matter what car you have. So I think that is also quite promising from a client's point of view.
Great. Okay, so it sounds like to me they have a pretty good customer base, you're saying, and they're well positioned that way.
Yeah.
But an improvement area would be getting more exposure to these computerized parts.
Exactly.
That makes a lot of sense to me. Okay, so I guess the midpoint steering committee meeting with the CFO and his VPs is happening tomorrow. So
Okay.
he knows you have 3 more weeks on the ground, but he's looking for a real-time update on your latest thinking. So what synthesis can you tell him here?
Can I just take a second to structure my thoughts, please?
Yep, for sure.
Amazing. Thank you so much for this opportunity to do this case, and it's been a pretty interesting piece of work. So the high-level update that I have for you is that from a market standpoint, self-driving is coming, so we can't avoid that. And what that's going to lead to is potentially a small reduction in the total number of cars being sold. At about potentially 20%, which is considerably less than what some of the analysts have earlier recommended. Now, I think moving forward from that, I want to talk about how our client is positioned to capitalize on this market. And there's 3 things I want to highlight there. That from a product point of view, our client is pretty well positioned broadly at having about 80% of their parts being transferable across both kinds of cars. from a partner's point of view or buyer's point of view, they're pretty well positioned where they have about 60% of their buyers who are also in the self-driving game. Finally, one improvement area for our client could be that only 10% of their revenue today comes from computerized parts, which is a small which is a critical component in self-driving, but a small component of our client's portfolio. So potentially they could invest in R&D there to improve that product portfolio and the sales subsequently.
Okay.
That's the midpoint update I have for you, and I'm looking forward to the next 3 weeks.
All right. Sounds great.
Hey everyone, it's Kenton Koveski here, the founder of Rocketblocks. Thank you so much for watching this mock interview video. I hope you found it informative and helpful as you are getting ready to prepare for your own interviews and hopefully landing that job offer you are excited about. We have a ton of great content on the Rocketblocks channel coming out on a weekly basis, mock interviews, mini lessons, and chats with our Rocketblocks experts. So if you haven't subscribed yet already, please do so. There is a big red button below. And if you hit that, you'll get all of our content as soon as it comes out. Thanks for watching and have a great day.